afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Wow, what bad data coming out of Europe today, those flash PMIs. If I had told you how bad they would have been before we saw the numbers this morning, anybody would have thought we would have been well below 110 in the euro. It's actually interesting to see how it's been buoyed at this round number. The German data, almost decade lows. We've seen contractions in the whole private sector now, but not a single number on French, German, and the Eurozone reads beat expectations. So just very disappointing coming out of that. And ultimately, too, the U.S. numbers were not good by any means, but some of the components, the manufacturing, the composite can be better than expected. The dollar really didn't strengthen much. I mean, the only reason the dollar was up here, the dollar index up on the day, is because the euro weakness and the pound weakness, but all other major currencies were stronger against the dollar today. So it's something to take a look at. Now, you have the trendline resistance in the euro, and there's a similar one in the dollar index. So as we head into the rest of the week, the euro trend line, we have that at about 111.30 area right now. If it starts getting out above there, that's where you can start to get a little bit of feeding on itself. But ultimately, you need to close at 111.5, 111.85 in that area ahead above the ECB meeting. That's where it can only really get out of this hole and start forcing some short covering. Outside of that, we need to get it closed down below 110. And when that happens, if it can happen, that's going to open the door down to 107, 108, and where there was a gap on a Sunday night open after the French election, and this market just rallied for really over the next year. So those are the levels we're looking at the euro, and then for the dollar index, very similar support trend line. For the downside, 97.5. It's been a floor we've been talking about, but you've been seeing as this thing has been slowly grinding higher. There is a trend line there, and it's been constructive. But if we start to close down below 98, starts to break through there to the upside, today's high in the dollar index, there's a trend line from the previous peak post Fed cut on July 31st. But you got to get above 98.5 and stay above 98.5 in order to really start encouraging a potential breakout. Really above 99. Get above 99, we could lead to 101. So those are really the areas we're looking at in the more broader term. Where is the next 2 to 3% range? Potentially, up to 5% if they really start to fly. Now the yen has found good support last week, coming at that August 1st rally when the stock market started to roll over. So we're moved off of that. There's manufacturing PMI data coming out of Japan tonight. Data out of Japan has been dismal, just as it is around the rest of the world. But keep an eye on that number. It could just light a little bit of a fire as it gives a little bit of hope. But to the upside, 94. There's the 50-day moving average. You get in this roughly that area, as well as a 382 retracement from that previous high after it stalled out from that August 1st run to where we've been bottoming out here and above 92.5. 94. Get above 94. Start to roll a little bit. Safe havens in general had really good sessions today. Gold closing right at that big resistance, major 3-star resistance, 1530. The 30-year bond got going early, but it did start to fall back. But 163 is going to be some big resistance here in the bond. This isn't really what to chase the market. Get some confirmations in there. So looking at the yen, again, it's a nice move. Some overhead resistance to keep an eye on. And then for the Aussie dollar, this is really playing out like a dead cat bounce failure. We had that bounce off the triple bottom low, and then it stalled out to where the resistance was, 68.90. We're bleeding lower, about a penny off that level. This is the 618 retracement from that low to the recent high, the recent swing high. It is where the volume started to pick up and help the Aussie dig out. So there is some support down here, but it's very bleak. So keep that in mind. If you're looking for a commodity currency to buy, we do like the Canadian dollar. We do have some interesting positions on with our option strategy, but 75 is going to be a lot of support, and because a few weeks back when we were trying to bottom at 75 in the Canadian dollar, it stuck its neck down below there. There is a trend line now that actually aligns with more like 75, but it never closed below 75 before there, so there's a lot of support there. It's starting to round out energies wise. Crude oil hasn't really helped the Canadian dollar as we could have imagined coming into last week, but the Canadian dollar is just trying to form a bottom here, and it could get going. Close above 75.80, it could start to run. Give us a call. We're here to help with anything on the board. And then tomorrow. Consumer confidence coming out of the U.S. We have German confidence numbers as well early. So keep an eye on those. Should have mentioned those earlier in the spot, but keep an eye on those as data points tomorrow that can move the market. Here we go. We're here for anything. 312-278-0500. Check our website for updates. You can email us info@bluelinefutures.com. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.